If you watch any video on tips on buying a home, one of the first things they're going to talk about is getting pre-approved for a mortgage. Well, in today's video, we're going to take a deeper look at the pre-approval process, and we're going to start right now. Now, there's two terms you'll often hear when they're talking about pre-approval. One is pre-qualified and the other is pre-approved. Okay, and there's a big difference between the two. And the main difference is in verification. Okay, when a lender pre-qualifies someone, and they can do that over the phone, but here's the situation. You talk to a lender, they provide the lender with your name, your income, your debts, and your employment status, and the lender will give you some kind of a ballpark idea of what you can get pre-qualified for. Okay, now pre-approved is different. Now with pre-approval, it's going to be verification. They're going to verify that information. Now when you submit an offer on the home, guess what? That seller is going to want to see for you to be pre-approved. Okay, and there's going to be some documentation you need to get together in order to provide to your lender in order to get pre-approved. Okay, that information is going to be a copy of your driver's license, the last 2 years of your tax returns, the last 2 years of W-2s, the last 30 days of your most recent paycheck stubs, the last 2 months of bank statements, and the last 2 months of your investment account statements. And that's what you want to provide to your lender in order for them to start the pre-approval process. Now the lender is going to look at three things. They're going to look at number one, your employment. And they're typically looking for the last 2 years of steady employment. Now, if you're self-employed, it's going to be a little bit more involved, and there's going to be a little bit more of a challenge if you're self-employed. Now, the second thing they're going to look at is your credit score. Now, your higher your credit score, the more options you're going to have. And then finally, what they're going to look at is your debt to income ratio. Okay, they're going to look at your monthly debt and divide that by your gross monthly income. Okay, for example, let's say your monthly debts, including your house payment, equals $1,250 a month, and your gross monthly income is $5,000 per month. Well, what they're going to do is they're going to take $1,250, divide that by 5,000 in order to get a 25% debt to income. And typically when you're buying a home, what they're looking for is they want it to be below 50%. Okay, now when you're buying a home, you're going to need money set aside for down payment and closing costs. And I'll include a link to a video on how much it takes in order to buy a home, and you can watch that video. But your lender is going to look at your credit score and your assets and then help determine what financing would best suit your needs. Okay, when you meet with your lender, you want to be upfront because eventually the truth is going to come out. And any issue is eventually going to come to the surface. Okay, and here's another thing to keep in mind. Let's say you go to your lender and you get pre-approved for $400,000. That doesn't necessarily you should run out there and buy a $400,000 house. Okay, you're going to look at your budget because a lot of folks, remember when they do your debt to income ratio, that's based off of your gross monthly income. Okay, that's not taking taxes into account. So you want to be careful about becoming house poor where your payment is so high that it doesn't leave you enough money to live on. So you want to keep that in mind. Another thing to keep in mind is you want to make sure that you want to have money for down payment and closing costs. But the other thing you want to make sure that you have set aside is what happens if, okay, you want to set aside enough money for maintenance issues. Okay, or let's say you're buying a home and when you do the home inspection, you want to really listen to that inspector because sometimes he'll say things that you may not pick up on. Okay, and sometimes it'd be like, hey, you better budget towards replacing that furnace it's a 20-year-old furnace, and you might have 5 years left of that furnace, of life left with that furnace. There's no guarantee it's going to last another 5 years. So you really want to pay close attention, and you want to start budgeting enough money for repairs and maintenance, because a lot of buyers will get in a bind to where they're not budgeting for that, and it can come back to bite you. So you want to make sure that you're setting some money aside for those maintenance items. Now here's another thing too. When you're getting pre-qualified or getting pre-approved in today's day and age, there's a lot going on with it, and there's a lot of folks that, hey, maybe they've had some issues in the past, in their early 20s with credit cards and that sort of thing, so they can't get pre-approved yet. Still doesn't hurt to talk to that lender, because sometimes what can happen is the lender can help guide you in order to set you on the right path to, maybe you can't buy a home now, but maybe in a couple of years you can purchase a home. So you really want to pay close attention to what the lender has to say, and then don't get discouraged, because maybe, hey, you can't buy it now, but maybe in the future you can. And then finally, the other thing I want to add is, if you're, let's say you're moving to the Omaha area, well, you want to make sure you get pre-approved with a local lender, okay, especially in this market. If you're in a situation where you're in multiple offer situation and you're competing against other offers, if you're an out-of-state lender, sometimes those listing agents are like, they get a little nervous about that. So you want to get pre-approved with a local lender here in town, especially if you're relocating to the Omaha area. Now, if you have any questions about finding a local lender, I can help you out with that. Just comment below. And if you don't mind giving this video a thumbs up, and you make it a great day.